Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the recent price hovering around the resistance level. The forecast price also suggests continued upward momentum, with an expected increase towards the end of the forecast period. This indicates a potential for significant gains in the long term. Therefore, the investment strategy involves entering a long position at the current market price, which is around $97,200. A stop-loss order should be placed at $95,800 to protect against potential downside risk. The target price is set at $102,000, aligning with the forecast price and allowing for a substantial profit margin. This strategy capitalizes on the bullish market sentiment and the anticipated price appreciation of Bitcoin in the long term. Given the price trends and forecast for Bitcoin Cash, a medium-term investment strategy appears suitable. The historical prices demonstrate a general upward trend, with recent fluctuations around the $580 to $620 range. Although the forecast predicts a slight dip followed by a gradual rise, the support price at $518.70 suggests a strong foundation for potential growth. Therefore, a long position is recommended for a medium-term investment strategy. An entry price around $585, near the recent resistance level and the current price, allows for potential upside as the forecast suggests a gradual increase. The stop loss should be set at $518.70, below the support level, to protect against significant downward movement. The target price can be set at $620, aligning with the upper end of the recent price range and the forecasted price trend. This strategy aims to capitalize on the potential for Bitcoin Cash to recover and continue its upward momentum in the medium term. Given the historical price fluctuations and the provided forecast for stacks, a cautious investment strategy appears most suitable. The price has shown a volatile trend, with recent highs near $2.74 and a recent dip to $2.24. The forecast suggests a gradual decline in price over the next week, reaching approximately $2.57. Considering this potential downward movement, a short-term short position could be considered. An entry price of $2.35, slightly above the current price but below the recent high, would allow for some room for price fluctuation before entering a short position. A stop-loss order should be placed at $2.45 to limit potential losses if the price unexpectedly rises. The target price could be set at $2.25, aiming to capitalize on the predicted price decline while staying below the strong support level of $2.217. This strategy prioritizes risk management and aims to profit from the anticipated short-term price correction in stacks. Based on the provided Ethereum price data, a medium-term investment strategy appears most suitable. The historical price shows a general upward trend, with recent fluctuations around the $3,800 level. The forecast predicts continued growth, reaching approximately $4,040 within the next week. This suggests a positive outlook for Ethereum in the short to medium term. Therefore, a long position is recommended. An aggressive investor could enter the market at the current price of approximately $3,990. A stop-loss order should be placed at $3,710, below the recent support level and the lowest point in the historical data. The target price should be set at $4,040, aligning with the highest predicted forecast price. This strategy allows for potential profit from the anticipated price increase while mitigating risk through a well-defined stop-loss. Given the price trends and forecast for Ripple, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating trend with recent upward momentum. The forecast indicates continued growth, suggesting a potential for capital appreciation. Therefore, a long position is recommended to capitalize on this anticipated price increase. An ideal entry price would be around $2.42, aligning with the current price and the support level. A stop-loss at $2.21, slightly below the recent dip, would protect against unexpected market reversals. The target price should be set at $2.83, based on the forecast, allowing for potential profit taking before the market reaches resistance. This strategy balances risk and reward, aiming for moderate gains over a medium-term horizon. Based on the provided information about Binance Coin, a medium-term investment strategy appears most suitable. The historical price data demonstrates a general upward trend, with recent fluctuations suggesting consolidation. The forecast price also indicates a continuation of this upward momentum, albeit with some short-term volatility. This suggests a potential for gradual price appreciation over the next few weeks. Therefore, a long position is recommended. An ideal entry price would be around $730, aligning with the projected price and recent consolidation. To manage risk, a stop-loss order should be placed at $717, slightly below the recent lows. The target price could be set at $750, aiming to capitalize on the anticipated resistance level and potential price breakout. This strategy balances risk and reward, allowing for potential profit from the expected upward price movement while protecting against significant downside losses. Based on the provided price data for Stellar, a cautious yet potentially rewarding investment strategy could be employed. The historical price data reveals a volatile trend with periods of both upward and downward movement. While the recent 2-week price change shows some downward pressure, the forecast suggests a slight upward trajectory in the coming week. Considering this, a long-term investment strategy with a focus on accumulating Stellar gradually appears favorable. An entry price around $0.487, aligning with the recent price dip and the forecast's anticipated slight recovery, could be a strategic starting point. A stop-loss order placed at $0.409, below the historical low point, would safeguard against significant price drops. The target price could be set at $0.5543, the recent resistance level, aiming to capitalize on a potential price surge. This approach allows for a balanced risk-reward profile, leveraging the potential for long-term growth while mitigating potential losses. Based on the provided Toncoin price information, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price history demonstrates volatility, with recent fluctuations indicating a potential for further price swings. While the forecast suggests a slight downward trend, the price remains relatively close to its support level. Therefore, a short position is recommended, capitalizing on the anticipated decline. An entry price of $6.75 aligns with the current market price and the downward forecast. A stop-loss at $6.85 mitigates potential losses if the price unexpectedly surges. The target price should be set at $6.45, aiming to capture a reasonable profit margin before reaching the support level. This strategy prioritizes risk management while seeking to capitalize on the short-term price movements anticipated for Toncoin. Given the Cardano price history and forecast, a medium-term investment strategy appears most suitable. The historical data shows price fluctuations, but generally trends upward. The forecast predicts continued upward movement, albeit with some minor dips. This suggests a period of consolidation and gradual growth. A long position would be appropriate to capitalize on this potential. To implement this strategy, we could enter a long position at the current price of around $1.10. A stop loss could be placed at $1.08 to mitigate risk in case of a sudden price drop. The target price could be set at $1.25, aligning with the forecast and allowing for a reasonable profit margin. This strategy balances risk and reward, aiming to benefit from Cardano's anticipated upward momentum over the next few weeks. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a volatile but generally upward trajectory, with recent fluctuations suggesting a potential consolidation phase. The forecast indicates a slight downward movement in the short term, followed by a gradual recovery. This suggests that Litecoin might be entering a period of consolidation before resuming its upward trend. Therefore, a long position is recommended for a medium-term investment strategy. The entry price should be around $115, taking advantage of the potential dip in price predicted by the forecast. The stop loss should be set at $105 to mitigate risk in case of a deeper decline. The target price can be set at $140, aligning with the historical resistance level and the projected upward movement in the medium term. This strategy allows for capitalizing on the potential for Litecoin to break through its recent consolidation and resume its upward trajectory while managing risk through a well-defined stop loss. Based on the provided Swaycoin price history and forecast, a medium-term investment strategy appears to be the most suitable approach. The historical data shows a general upward trend, with recent price fluctuations around the $3.70 to $4.20 range. The forecast suggests continued growth, albeit with some slight corrections. This indicates a potentially profitable opportunity for medium-term investment. Therefore, I recommend a long position on Swaycoin. An entry price around $4 could be considered, aligning with the current price and offering a potential entry point before the next anticipated price increase. The stop loss should be set at $3.80 to protect against unexpected price drops, while the target price could be set at $4.40, aiming to capitalize on the forecast's upward trajectory. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in a medium-term timeframe. Based on the provided historical price data for Aptos, the price has been relatively stable and slightly upward trending over the past 2 weeks. The forecast indicates a continuation of this upward trend, with prices expected to hover around $13 for the next week. Considering this positive outlook and the price stability, a long-term investment strategy appears to be favorable. An entry price of $13, aligned with the forecast, would be suitable for a long position. A stop loss could be set at $11, just below the recent dip in price, to protect against any unexpected downward movements. The target price could be set at $14.64, the resistance level, aiming to capture potential gains if the price reaches its highest point in the given timeframe. This strategy capitalizes on the anticipated upward momentum of Aptos while managing risk through a well-defined stop loss. Given the provided price history and forecast for SE, a short-term investment strategy appears most suitable. The recent price action shows a downward trend, with the forecast suggesting further declines in the coming week. The price has fallen significantly from its peak, reaching near the support level. While there is a chance for a rebound, the overall trend and forecast indicate a higher probability of continued downward movement. Therefore, a short position would be the most advantageous strategy. An entry price of $0.675 aligns with the current market price and the downward forecast. The stop loss should be set at $0.695, slightly above the current price, to protect against any unexpected upward movements. The target price should be set at $0.635, based on the forecast's lowest predicted price, allowing for potential profit before the price potentially reaches the support level. This short-term strategy aims to capitalize on the anticipated decline in SE's price within the next week. Based on the Ethereum Classic price information, a medium-term investment strategy appears most suitable. While the recent 2-week price change shows some volatility, the forecast suggests a relatively stable upward trajectory. The current price sits close to the support level, indicating a potential buying opportunity. Therefore, a long position is recommended. An entry price of $32 would be appropriate, allowing you to enter the market near the current price. A stop loss at $31 would protect your investment from sudden downward movements. The target price should be set at $37, aligning with the forecasted price and capitalizing on the anticipated upward movement. This strategy balances risk and reward, aiming for a moderate return over the medium term. Based on the provided price information for Polygon, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with periods of both upward and downward movement. While the recent price has dipped, the forecast suggests a gradual upward movement over the next week, ultimately stabilizing around the 67 cents price point. This indicates a potential for a rebound in the coming weeks. Considering this outlook, a long position is recommended. An optimal entry price would be around 59 cents, allowing you to capitalize on the anticipated price increase. To manage risk, a stop-loss order should be placed at 57 cents, protecting against potential further declines. The target price can be set at 70 cents, aiming to capture a significant portion of the projected upward movement. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in the medium term. Based on the provided price information for AEVO, a medium-term investment strategy appears most suitable. The historical price data shows a recent upward trend, with the price fluctuating around the $0.500 level. However, the forecast price indicates a potential pullback in the near term, followed by a gradual increase towards the end of the forecast period. This suggests a consolidation phase before a potential continuation of the upward trend. Therefore, an investment strategy involving a long position is recommended. The entry price should be set at $0.510, slightly below the current price, allowing for a small margin of safety. The stop loss should be placed at $0.468, below the recent support level, to protect against a significant price decline. The target price can be set at $0.620, aligning with the projected price increase towards the end of the forecast period. This strategy capitalizes on the potential for a medium-term price appreciation while mitigating risk through a well-defined stop loss. Based on the provided price history and forecast for optimism, a cautious investment strategy with a medium-term perspective appears suitable. The recent price history shows some volatility, with a slight upward trend in the last few weeks. However, the forecast indicates a slight decline in the coming week. This suggests a potential consolidation phase in the short term. Therefore, a medium-term investment strategy with a focus on potential upside in the coming weeks is recommended. The entry price could be around $2.50, slightly below the current price and the forecast's lowest point. The stop loss should be set at $2.40, below the recent support price, to limit potential losses. The target price could be set at $2.70, aiming for a potential upside based on the historical price range and the forecast's highest point. This strategy allows for capturing potential gains while mitigating risk during the anticipated consolidation phase. Based on the provided price history and forecast for STRK, a short-term investment strategy appears most suitable. The historical price data shows a period of volatility, with recent fluctuations ranging from approximately $0.578 to $0.787. The forecast suggests a potential upward trend, with prices predicted to reach around $0.739 in the coming week. However, the current price is relatively close to its recent highs, indicating a potential for a short-term correction or consolidation. Therefore, a short position could be considered with an entry price around $0.725, aligning with the current price and the potential for a pullback. A stop loss should be set at $0.740 to limit potential losses if the price continues to rise unexpectedly. The target price could be set at $0.680, allowing for a potential profit if the price retraces towards the support level. This strategy capitalizes on the potential for short-term price volatility while mitigating risk through a well-defined stop loss. Given the provided data for Solana, the investment strategy suggests a cautious approach with a short-term perspective. The 2-week price change reveals a downward trend, while the forecast indicates continued declines. Although the price is near the support level of $179.43, the resistance at $225.69 suggests limited upward potential. Therefore, a short position on Solana appears to be the most suitable strategy. An entry price of $225, aligning with the current resistance level, offers a good starting point. A stop loss should be placed at $237, slightly above the recent price highs, to minimize potential losses. The target price can be set at $216, the lowest point in the recent price history, allowing for a reasonable profit margin. This strategy capitalizes on the anticipated downward price movement while managing risk effectively. Based on the provided price information for Jupiter, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with both upward and downward movements. While the recent price has dipped, the forecast suggests a gradual upward trajectory over the next week. This indicates a potential for price recovery and a possible entry point for a long position. A conservative entry price could be around $1.20, aligning with the forecast and allowing for some room for price fluctuation. A stop-loss order should be placed at $1.15 to mitigate potential losses if the price unexpectedly drops further. The target price could be set at $1.30, considering the potential for price appreciation based on the forecast and historical price patterns. This strategy aims to capitalize on the anticipated upward momentum while managing risk through a well-defined stop-loss and target price. Based on the provided price information for Render, a short-term investment strategy appears promising. The historical prices demonstrate a clear upward trend, culminating in a recent peak of $10. The forecast further reinforces this positive outlook, predicting a continued rise towards $9.96 over the next week. This suggests that Render is likely to experience further price appreciation in the short term. Given this bullish sentiment, a long position is recommended. An optimal entry price would be around $9.65, slightly below the current price, allowing for a potential margin of safety. A stop-loss order should be placed at $8.90, safeguarding against any unexpected downward movements. The target price could be set at $10.20, aiming to capitalize on the predicted price increase and secure a healthy profit margin. This strategy capitalizes on the short-term upward momentum of Render while managing risk effectively through a well-defined stop-loss order. Given the historical price data and the one-week forecast for Solana name service, a medium-term investment strategy appears to be the most suitable approach. The price has shown a consistent upward trend over the past 2 weeks, with the forecast indicating continued growth. Although the price has recently pulled back, it remains above the support level of $0.2695, suggesting that the underlying bullish momentum is still intact. The resistance level of $0.3483 presents a potential target for the price to reach in the coming weeks. Therefore, a long position in Solana name service is recommended for a medium-term investment strategy. An entry price of $0.320, slightly below the current price, allows for a margin of safety while still capturing potential upside. The stop-loss should be set at $0.275, below the recent support level, to protect against significant price declines. The target price should be set at $0.360, aligning with the forecast and aiming to capture a substantial portion of the anticipated price appreciation. Given the price trends and forecast for Doge-Coin, a short-term investment strategy focused on a long position seems appropriate. The historical prices show a generally upward trend, although there have been some fluctuations. The current price is near the support level of $0.39085, indicating a potential buying opportunity. The forecast suggests a continued upward movement, with prices potentially reaching $0.486 in the coming week. Therefore, a long position with an entry price around $0.425, slightly below the current price, is recommended. The stop-loss should be set at $0.408, below the recent low, to limit potential losses. The target price could be set at $0.470, aiming to capture a significant portion of the forecasted price increase. This strategy capitalizes on the bullish momentum and aims to generate profits from the potential price appreciation of Doge-Coin in the short term. Given the provided price history and forecast for PEPE, a bullish investment strategy appears promising. The historical price data shows a generally upward trend, with recent fluctuations around the $0.0000222 support level. The forecast indicates continued growth, projecting prices to reach $0.0000305 in the coming week. This suggests a potential for capital appreciation in the short to medium term. Therefore, a long position in PEPE is recommended. An aggressive entry price could be around $0.0000249, aligning with the recent price action and just below the resistance level of $0.0000265. To manage risk, a stop loss should be placed at $0.0000222, the identified support level. The target price could be set at $0.0000277, reflecting the higher end of the forecast and offering a reasonable profit potential. This strategy capitalizes on the perceived bullish momentum and aims to capture gains within a defined timeframe. Based on the provided information for SHIB, a short-term investment strategy appears most suitable. The price history demonstrates a fluctuating trend with recent dips and rallies. The forecast suggests a slight upward movement over the next week, but the price remains close to its support level. This indicates a potential for a short-term price surge before encountering resistance. Therefore, a long position is recommended, aiming to capitalize on this potential upward movement. The entry price should be set around $0.0000287, a point slightly below the current price, allowing for a small margin of safety. The stop loss should be placed at $0.0000271, the recent low point in the price history, to minimize potential losses. The target price can be set at $0.0000320, aligning with the forecast and a resistance level, allowing for a reasonable profit margin. Given the price trends and forecast for Dog with Hat, a short-term investment strategy focused on a long position appears promising. The historical prices show a general upward trend, with the recent price hovering near the support price of $2.466. The forecast indicates continued price appreciation, with the projected price reaching $3.56 within the next week. This suggests a bullish sentiment in the short term. Therefore, I recommend entering a long position at the current market price, which is slightly above the support price. The stop-loss order should be placed below the support price at $2.45 to minimize potential losses. The target price should be set at $3.55, aiming to capture a significant portion of the forecasted price increase. This strategy capitalizes on the bullish momentum and allows for potential profit within a short time frame. First, based on the provided price history and forecast for Altcoin, a short-term investment strategy appears most suitable. The price has been fluctuating within a relatively narrow range, with recent dips suggesting a potential bearish trend. The forecast also indicates a downward trajectory for the next week, supporting the bearish outlook. Therefore, a short position on Altcoin is recommended. An entry price of $0.0087, close to the recent price action and slightly above the support level, would be appropriate. The stop loss should be set at $0.00953, slightly above the recent high, to limit potential losses. The target price could be set at $0.007764, the resistance level, aiming to capitalize on the anticipated price decline. This strategy aims to profit from the short-term bearish momentum in Altcoin while managing risk with a well-defined stop loss. Based on the provided price information for Near Protocol, a cautious investment strategy focusing on the medium term appears most suitable. The historical price data shows fluctuations, but the recent trend suggests a slight upward momentum. The forecast price also indicates a continued upward trajectory, albeit with some volatility. While the support price at $6.138 provides a potential floor, the resistance at $6.823 might present a hurdle for significant price increases in the short term. Therefore, a long position is recommended with an entry price around $6.50, slightly below the recent historical price. This allows for a margin of safety while capturing potential upside. The stop loss should be set at $6.15 to minimize potential losses if the price drops below the support level. The target price can be set at $7, aligning with the forecast and representing a reasonable profit target. This strategy allows for capital appreciation while managing risk effectively, taking advantage of the medium-term bullish outlook for Near Protocol. Based on the Internet Computer Price history and the provided forecast, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a volatile trend with periods of both upward and downward movement. While the forecast suggests a slight decline in the short term, it also indicates a potential rebound in the medium term. This suggests that a patient investor who can withstand short-term fluctuations may be rewarded with gains as the price potentially recovers and moves towards the resistance level. Therefore, an entry price of $13.50 would allow for a purchase slightly above the current price and below the resistance level. The stop loss should be set at $12.50 to protect against a further decline, while the target price should be set at $15. This target price represents a reasonable upside potential based on the historical price range and the forecast. This medium-term strategy allows for capitalizing on the potential for price recovery while managing risk effectively. Based on the provided injective price information, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a slight upward bias. Although the forecast suggests a slight dip in the coming week, the support price at $25.84 acts as a strong foundation, indicating potential for a rebound. Therefore, I recommend a long position on injective. An entry price around $29.50, slightly below the current price, allows for a margin of safety while capturing potential upside. The stop loss should be set at $25.84, the support level, to limit potential losses. The target price could be set at $34.15, the resistance level, aiming to capitalize on a potential price surge. This strategy allows for a balanced approach, capitalizing on the potential for growth while mitigating risk through a well-defined stop loss. Given the price trends and forecast for BTC, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show some volatility, with recent dips followed by rebounds. The forecast suggests a slight upward movement in the coming week, but with potential for some consolidation. The support price of $560.50 indicates a potential floor for the price, while the resistance at $604.30 suggests an upper limit for the near term. Considering these factors, a long position could be considered with a cautious approach. An entry price around $590 could be considered, allowing for some buffer above the support level. A stop loss could be set at $570 to limit potential losses if the price drops unexpectedly. The target price could be set at $610, aiming to capture a portion of the potential upward movement suggested by the forecast. This strategy emphasizes risk management and aims to profit from short-term price swings while avoiding excessive exposure to potential downturns. Based on the provided historical price data and the forecast for THETA network, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate an overall upward trend, with recent fluctuations suggesting consolidation before a potential breakout. The forecast indicates continued upward momentum, with prices expected to rise towards $3.07 in the coming week. This aligns with the resistance level at $3.16, suggesting a potential ceiling for short-term gains. Therefore, a suitable investment strategy would involve entering a long position at the current price of around $3.04. A stop-loss order should be placed at $2.90, protecting against significant price drops. The target price should be set at $3.1, aiming to capture a portion of the anticipated upward movement. This strategy capitalizes on the short-term bullish outlook for THETA network while mitigating risk through a well-defined stop loss. Given the price trends and forecast for WorldCoin, a short-term investment strategy appears to be the most suitable. The historical price data shows a volatile trend, with recent fluctuations suggesting potential for short-term price movements. The forecast indicates a slight upward movement in the coming week, but the price is currently close to its resistance level of $3.645. This suggests that a short-term upward move might be limited, and the price could potentially pull back. Therefore, a short position on WorldCoin with an entry price around $3.55, a stop loss at $3.65, and a target price at $3.30 seems appropriate. This strategy aims to capitalize on a potential price correction in the short term. The stop loss ensures limited risk if the price unexpectedly moves higher, while the target price allows for a decent profit margin if the forecast of a pullback materializes. This strategy aligns with the short-term outlook and aims to take advantage of potential volatility in the WorldCoin price. Based on the provided price history and forecast for Hooked Protocol, a medium-term investment strategy appears to be the most suitable approach. The recent price action shows a fluctuating trend with a slight upward bias. While the forecast suggests a slight decline in the short term, the medium-term outlook remains positive. The historical price data reveals a strong support level at $0.4376, indicating a potential buying opportunity if the price dips to this level. Therefore, a long position on Hooked Protocol is recommended for a medium-term investment horizon. An entry price of $0.550 could be considered, allowing for a buffer below the current price and the recent resistance level of $0.6859. The stop loss should be placed at $0.500 to minimize potential losses in case the price drops significantly. The target price could be set at $0.750, aiming for a substantial profit based on the historical price trends and the potential for upward movement in the medium term. Based on the provided Artificial Superintelligence Alliance price data and forecast, a short-term investment strategy appears most suitable. The historical price shows fluctuations, but generally trends upwards, with the recent price hovering around $1.95. The forecast predicts a slight dip followed by a gradual increase, suggesting a volatile but potentially profitable short-term opportunity. Therefore, an aggressive short-term investment strategy could involve entering a long position at the current price of $1.95. The stop loss could be set at $1.85 to limit potential losses if the price drops unexpectedly. The target price could be set at $2.10, aiming to capitalize on the projected price increase. This strategy leverages the anticipated upward momentum while managing risk through a well-defined stop loss. Given the price trends and forecast for Polkadot, a medium-term investment strategy appears most suitable. The historical prices show a recent upward trend, but the forecast indicates a slight pullback before resuming growth. The support price sits at $6.598, providing a strong foundation for potential price recovery. The resistance level at $8.719 presents an immediate hurdle for further upward movement. Therefore, a long position is recommended to capitalize on the anticipated price increase towards the resistance level. An ideal entry price would be around $8, aligning with the recent historical price and providing a buffer below the resistance. The stop loss should be set at $7.50 to protect against unexpected price drops. The target price could be set at $8.70, aiming to capture the potential upside momentum before encountering the resistance level. This strategy allows for a balanced approach, taking advantage of the bullish outlook while managing risk effectively. Based on the provided information for Filecoin, a medium-term investment strategy appears most suitable. The historical price data demonstrates a volatile trend with periods of both growth and decline. While the forecast suggests a slight upward movement, the volatility indicates potential for price fluctuations within the medium term. Therefore, a long position is recommended, aiming to capitalize on the potential upward momentum. An entry price around $7 would allow for a purchase at a point near the recent highs, but below the current resistance level. A stop-loss order could be placed at $6.26, the recent support level, to limit potential losses. The target price could be set at $8, aligning with the recent highs and allowing for a potential profit margin. This strategy balances the potential for growth with risk management, making it suitable for a medium-term investment horizon. Based on the historical price data and the provided forecast for Conflux, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, although with some fluctuations. The forecast suggests a continuation of this upward momentum, with prices potentially reaching around $0.243 in the coming week. This indicates a bullish outlook for Conflux in the short to medium term. Therefore, an investment strategy could involve entering a long position at a price slightly below the current market price, around $0.240. A stop-loss order could be placed at $0.202, the lowest recent historical price, to limit potential losses. The target price could be set at $0.252, the recent resistance level, aiming to capture a significant portion of the potential price appreciation. This strategy allows for a balanced approach, capitalizing on the bullish forecast while mitigating risk through a well-defined stop-loss. Given the provided price history and forecast for Ethereum name service, a short-term bullish investment strategy appears promising. The historical price data reveals an overall upward trend, with recent fluctuations indicating potential consolidation. The forecast suggests a continuation of this upward momentum, with prices expected to remain relatively stable around the $40 to $41 range. This suggests a limited downside risk, making it suitable for a short-term investment horizon. Therefore, a long position in Ethereum name service is recommended. An entry price around $40 could be considered, with a stop-loss placed slightly below the recent support level of $39 to manage risk. The target price could be set at $42.53, the resistance level, aiming to capitalize on the anticipated price increase. This strategy capitalizes on the positive price momentum and the relatively low risk profile associated with short-term investments in this asset. Based on the provided information about Avalanche, a medium-term investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a volatile, but generally upward trend, with a recent surge to $53. The forecast predicts continued growth, suggesting a potential continuation of this upward momentum. However, the price is nearing the resistance level of $54, indicating a possible period of consolidation or a slight retracement before further significant gains. Therefore, a long position is recommended. An entry price around $51.50 could allow for capturing potential upside while minimizing risk. A stop-loss at $49.50 would protect against a sudden price drop, and a target price of $54 would aim to capitalize on the predicted price movement towards the resistance level. This strategy balances risk and reward, allowing for potential profits from Avalanche's continued growth within a medium-term timeframe. Given the provided Bitcoin price history and forecast, a medium-term investment strategy appears most suitable. The historical data shows Bitcoin has experienced both upward and downward price fluctuations, indicating a volatile but potentially rewarding market. The forecast suggests a continued upward trend, with prices potentially reaching $0.0687 within the next week. However, it's essential to consider the support and resistance levels. Therefore, a long position is recommended. An ideal entry price would be around $0.0648, close to the current price and below the recent resistance level. A stop-loss order should be placed at $0.0630 to limit potential losses. The target price could be set at $0.0687, aligning with the highest forecasted price, allowing for a profitable exit if the forecast proves accurate. This medium-term approach allows for potential gains while managing risk through a well-defined stop-loss strategy. Based on the provided price information for PENDLE, an investment strategy focusing on a short-term, bullish outlook appears promising. The historical price data reveals a consistent upward trend, with the price recently surpassing the resistance level of $5.924. The forecast price further supports this bullish sentiment, indicating continued upward movement towards $6.44 over the next week. This suggests that PENDLE is poised for further price appreciation in the short term. Therefore, a long position is recommended to capitalize on this potential. An ideal entry price would be around $6.20, slightly below the current price, allowing for a margin of safety. The stop-loss should be set at $5.90, just below the recent resistance level, to protect against unexpected downward movements. The target price could be set at $6.45, aiming to capture a significant portion of the anticipated price increase. This strategy leverages the positive price momentum and forecast for PENDLE, aiming for a profitable short-term investment. Based on the historical price data and the provided forecast for the sandbox, a medium-term investment strategy appears to be most suitable. The historical price shows a general upward trend with some fluctuations, indicating potential for continued growth. The forecast also suggests a positive outlook for the coming weeks, with prices expected to rise above the current levels. Therefore, a long position is recommended for the sandbox. A reasonable entry price would be around 76 cents, slightly below the recent peak and above the support level. The stop loss should be placed at 61 cents, the recent low, to limit potential downside risk. The target price could be set at 92 cents, aligning with the higher end of the forecast and offering a potential profit margin. This strategy allows for capitalizing on the anticipated price increase while managing risk effectively. Based on the provided price information for Decentraland, a short-term investment strategy appears most suitable. The historical price data shows a recent surge, reaching a high of $0.771. However, the forecast suggests a slight pullback in the coming weeks, with prices potentially dipping below the current level. This indicates a potential opportunity to enter a short position, capitalizing on the anticipated decline. An entry price of $0.752 aligns with the current market price and the projected dip. The stop loss should be placed at $0.771, above the recent high, to limit potential losses if the price unexpectedly rises. The target price can be set at $0.695, aligning with the support price and the lower end of the forecast range. This strategy aims to profit from the short-term price correction while minimizing risk through a well-defined stop-loss mechanism. Given the price trends and forecast for ENG coin, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a recent upward trend, with a slight correction in the last few days. However, the forecast suggests a continued upward movement in the coming weeks, reaching a peak around $0.354. The support price of $0.2102 provides a strong base for potential buying opportunities if the price dips. Therefore, I recommend a long position on ENG coin for a medium-term investment horizon. An entry price around $0.285, aligning with the recent correction, would allow you to enter the market at a potentially attractive price point. A stop loss at $0.269, below the recent lows, would help protect against significant downside risk. The target price could be set at 35 cents, aiming to capture a portion of the anticipated upward movement before the price potentially reaches its peak. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Based on the provided price information for Uniswap, a short-term bullish investment strategy appears to be the most suitable approach. The historical price data reveals a steady upward trend, with the price recently hovering around $18, indicating potential for further growth. The forecast price further supports this outlook, projecting continued upward movement towards $19 within the next week. This suggests that Uniswap is currently in a favorable position for a short-term investment. Considering this bullish outlook, an entry price of $17.50 could be strategically chosen, allowing for a small margin of safety below the current price. A stop-loss order could be placed at $17, protecting against potential price reversals. The target price should be set at $19, aligning with the highest projected forecast price, aiming to capture the anticipated upward movement. This strategy capitalizes on the short-term bullish momentum while incorporating risk management measures to mitigate potential losses. Given the provided price history and forecast for Chainlink, a medium-term investment strategy appears promising. The historical data demonstrates a consistent upward trend, punctuated by periods of consolidation. The forecast suggests continued upward momentum, with prices expected to reach $26 within the next week. This aligns with the historical resistance level of $26.33, indicating a potential for a breakout. Therefore, a long position is recommended. An entry price of $24.50, slightly below the current price, allows for a margin of safety. The stop loss should be set at $23.50, protecting against a potential pullback to the previous support level. The target price should be set at $26.33, aiming to capture the full potential of the anticipated price increase. This strategy capitalizes on the bullish outlook for Chainlink while managing risk through a well-defined stop-loss order. Based on the provided price information for Aave, a bullish investment strategy appears promising. The historical price data demonstrates a clear upward trend, with recent peaks consistently surpassing previous highs. This upward momentum is further supported by the positive forecast, which predicts continued price appreciation in the coming weeks. The support price of $247.64 acts as a solid foundation, indicating a strong buying pressure at lower levels. Considering this bullish outlook, a long position in Aave is recommended. An ideal entry point would be around $278, slightly above the current price and close to the resistance level. This allows for potential profit from the anticipated price surge towards the forecast high of $299. A stop-loss order should be placed at $260 to limit potential losses in case the price unexpectedly reverses. The target price should be set at $310, aiming to capture a significant portion of the projected price appreciation. This strategy capitalizes on the positive price trends and forecast for Aave, offering a potentially lucrative investment opportunity in the short to medium term. Given the price trends and forecast for EOS, a medium-term investment strategy would be suitable to capitalize on the anticipated upward momentum. The historical prices show a volatile, but generally upward trajectory, with the current price hovering near the support level of $0.4842. The forecast suggests EOS could rise from its current price to around $1.28 in the coming weeks. This indicates a bullish outlook in the medium term, making a long position the most suitable strategy to capitalize on the potential for a price increase. An entry price of 95 cents would allow you to buy in at a relatively low point, while the stop loss should be set at 85 cents to protect against any unexpected price decline. The target price should be set at $1.30, slightly above the forecasted highest price, allowing you to take profits before a potential pullback. This strategy balances risk and reward, aiming to capitalize on the upward momentum of EOS in the medium term. Based on the provided Tron price information, a cautious medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with significant fluctuations. While the recent price movement shows a downward trajectory, the forecast suggests a potential rebound in the coming week. The support price at $0.2119 indicates a potential floor for the price, while the resistance at $0.3314 signifies a significant hurdle for upward movement. Therefore, a long position is recommended with an entry price around $0.262, slightly above the recent low. This allows for some room for price consolidation before a potential upward move. The stop loss should be set at $0.2119 to protect against a deeper decline, while the target price could be set at $0.318, aiming to capture a portion of the potential rebound. This strategy balances risk and reward, capitalizing on the potential for a price recovery while mitigating the downside risk associated with the current market uncertainty. Suncoin's historical price data reveals a volatile trend with both upward and downward movements. While the recent price has been declining, the forecast suggests a potential for a slight rebound in the coming week. Considering these factors, a short-term investment strategy with a focus on the long side appears to be promising. An entry price around $0.0285, slightly below the current price, would allow for potential upside while minimizing immediate risk. The stop loss should be set at $0.0271, aligning with the lowest forecasted price, to safeguard against unexpected price drops. The target price can be set at $0.0312, the highest forecasted price, aiming to capture the potential upward movement. This strategy capitalizes on the predicted rebound while managing risk through a well-defined stop loss and a realistic target price.